how to compare this, we're looking at Gbtc. The expense ratios are different. Is that where you hope to differentiate yourself?
That's the big point of differentiation. Both Grayscale and us have been managing money in the crypto market for a number of years, well established. We use institutional custodians. The big difference, we're charging a 1.5% fee. They charge a 2% fee. Obviously, they're larger and more liquid, but we want to give investors a choice if they care about fees from a reputable, established manager. So that's why we're bringing this out to public trading, hopefully.
Can you explain that they're more liquid part of the equation? That caught my attention.
Sure. It's just like in the ETF space. You know, often the first mover in the ETF market becomes the larger fund and there's more trading and it's liquid, easy to trade. Then you get new entrants that come in with lower fees and maybe they have a little bit less liquidity. Maybe you have to trade it a little more carefully. Maybe it's better for long-term buy and hold investors as opposed to short-term traders. So really different funds serving different markets. We specialize in serving professional investors and people who want to take a long-term allocation to crypto. And for those people, fees really do matter. They add up over time.
Presumably, though, as this particular fund, should it get the green light, it gets bigger and bigger, it will be as liquid, I would imagine, as a larger fund like a Gbtc. Is that correct?
I love what you're saying, and I definitely hope that's true, Melissa, and that's our plan. So over time, yes, we would hope that it gets more liquid, and that's our expectation. And again, we've seen it time and time again in other parts of the market covered by ETFs. This isn't an ETF, it's an OTC traded trust, but the same rules should apply. People care about fees, they care about quality. Hopefully we're giving them both.
You know, Matt, I know you, our viewers know you primarily from ETF.com and Inside ETFs. And so I wanted to get your take on what was going on with GameStop and the ride it's put some specific ETFs on along with it, namely the retail ETF, for instance, even the Russell 2000 for that matter. GameStop for a brief period of time was the largest component on the Russell 2000. What's your take in terms of the impact on sort of the narrower ETFs out there?
Yeah, I think it does expose a risk, which is when you get those very narrow ETFs that very select stock baskets and you get significant run-ups, you can see single securities coming to be a big part of that portfolio. I think we're all wrestling with the implications of GameStop, not just on the ETF market, but on other parts of the market. You know, I think we'll see probably ETFs take a little bit more discretion around the edges in the unusual circumstances if they continue this way. But it is something for ETF investors to think about and be aware of. Just because it's an ETF doesn't necessarily mean it's diversified, right? We've come a long way from the spiders of the world that give broad-based exposure. We now have very narrow ETFs. They can be very interesting, very exciting, very good for portfolios, but you do have to be careful, and what you're pointing out is one of the reasons why.
Are you going to go with a Bitcoin ETF? Do you hope to, let me rephrase that. Do you hope to have a Bitcoin ETF, and what do you think that will do in terms of assets in the market for Bitcoin?
Absolutely, Melissa. We're working day and night and have been for years on trying to get a Bitcoin ETF approved by the SEC. And it's not just us, it's other asset managers. I think it will open up the market to a large number of investors. Look, there is no perfect way today to get exposure to Bitcoin. You could buy it on your phone, but there's security risk. You could buy through one of our funds, but maybe there's paperwork risk or premiums and discounts that come with these OTC traded trusts. An ETF would make it push button easy. So of course it would bring more investors into the market. I think it's going to happen. The question for investors is, do they want to wait until it's push button easy, or do they want to use one of these other alternatives to get in before that happens? And that's just a choice that every investor has to make, and different investors will weigh it and decide differently.